Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look what we could expect on the euro currency in the beginning of the next week. The situation on the daily chart is not as simple as it looks like. Sorry for a lot of different lines. It's a bit overloaded chart, but I just want to save the time of the research and speak only about the major positions currently on the euro currency. Well, in fact, we see that market stands in the long-term bear trend, and on the monthly time frame, price finally has triggered the engulfing pattern that in fact could lead the market right to the yearly pivot support, so around 1 to 23.30 area. But in the short-term perspective, we see that within all this move to the downside, in fact, market hasn't shown any even 3-8 bounce. That's the first moment. The second moment is that on the weekly time frame, we have disrespected confluence resistance area, confluence support area that has been broken by the market, and it's very often on the market in such situations return right back and testing this disrespected area. That's very often happens, not only with just confluence support resistance lines, but with any natural and classical support resistance if it's rather strong. All that I would like to say is that there are some pressure is growing here, particular pressure to the downside, and our market looks a bit oversold, although we do not have it on this indicator. But in general, this price action right from the beginning of the year, no significant retracement, tells us that sooner or later some pullback could happen. But when it will happen, this is really the question that's very difficult to answer currently. Well, I prefer to see the pullback as will be perfect. The pullback will start from the major 5-8 support, the daily time frame, that is stands around 126.70 area. I do not have it in this chart, but guys, I think that you remember it stands lower, and there particular stands the target of the current move down. This is the major 5-8 support on the daily time frame. But this also is possible that this respect and this pullback to the upside could happen earlier, because if we will see and take a look at the harmonic swings that marked by the red line to the downside, take a look at at each end point of this swing the retracement has started. So you can see that market moves in the 2-step forward, 1 step back. So you can see on each red line comes 2 retracements. That is the half of the move to the downside. So 2 step downward, 1 step up, 2 step downward, 1 step up, again 2 step retracement, again 2 steps. Now market stand at the end point of the harmonic swing to the downside. Also, we have the monthly pivot point of the April that has been touched yet, so just has appeared, and the minimum swing up, that is the clone line of all of these swings, the same distance points precisely under retesting of this area. That will be the minor bounce if it will happen. But if market will show the deeper retracement to the upside, and we know that usually market moves in some multiplication of the harmonic swings, and if it will double harmonic swing to the upside, it will lead us to the area around 131.17 area. That is 3-8 retracement, 3-8 resistance of the whole swing down, daily overbought, and that is the disrespected the confluence resistance on the weekly time frame. And take a look, monthly pivot resistance 1. So we know the market stands in the long-term bear trend. Usually the pivot resistance 1 holds the retracement. The one problem with all of this stuff that we have just discussed is that we do not have any patterns yet that could let us to say yes, probably this retracement will start. It will start right from this point. This is all only just the calculations and some relative confirmation, some relative moments, relative hints that this retracement could start maybe even from that point, who knows. This comes to my mind because too much factors gathered in the very harmonic puzzle. Harmonic swings, double swing up points on the disrespected confluence resistance. It coincides with the weekly pivot resistance one. You can see all the details could be gathered in some clear and harmonic picture. That's why I think that we should be very careful with the current price, current action here, because retracement really could happen. And mostly it will depend on how market will respond on the current level on the intraday charts. So here also we see that market has formed 3 days that inside of each other. So this Thursday, this inside session for the Wednesday, this inside session for the Tuesday. In fact, market stands flat and shows some, if we could call it, either indecision or preparation for the holidays. So maybe the activity was less than usual due to the holidays and market just wait for them. Anyway, let's take a look at the 4-hour time frame. On the 4-hour time frame, we do not see nothing new except the same parallel channel to the downside, completion point of this inside ABCD, inner ABCD pattern. So market will start to move up. We could expect to move right to the 129-130 area inside of this range. That is possible. And at least we could count on the testing of the monthly pivot point and weekly pivot point. But if market will hold there, from that standpoint, it's very valuable for us the hourly time frame. In fact, we have the same picture as on Wednesday. We have discussed this retracement has started, and I said, guys, take a look at this consolidation and this confluence resistance, because I don't mind against the retesting of this broken consolidation and confluence resistance from the bearish point of view, but I will mind and will argue against the move above it, because that will be not quite bearish price action, and that will add worrying sign in the bearish sentiment. It will tell us that something is wrong. It will tell us that probably bears are not as strong as it seems previously, and maybe it could skip and let market to show some deeper bounce, some deeper retracement up that, as I said, wasn't here since the January. And here we have very intriguing picture. You could see that market already has touched this level that is reasonable as the bearish retracement, but now it's calling right below it. So what we see from the one point of view, we see the continuation pattern. We could call it as the triangle or maybe pennant. That is the upward continuation pattern. Another moment is the flat action with the bear trend. So that is some sort of the bullish dynamic pressure. So you can see market is forming high lows here and here inside of the triangle. It could continue move to the upside. If it will happen, we could expect some sort of the ABCD action to the upside. At minimum with the retesting of the weekly pivot point, it's 128.70 area, and probably the monthly pivot point as well. It's 129, because you can see just the 30 pips between them. That will be the first point, and particularly this area is the target of the one harmonic swing up on the daily time frame. Okay, so in the beginning of the week we have to be extra careful with this level. But still, if you do not have any doubts about the bearish action on the daily time frame, if you are sure with the bearish setup and this overall situation doesn't embarrass you, so in this case that is very nice area trying to enter short, mostly because you could place the tight stop somewhere slightly above this confluence resistance. Your stop will be very tight and very close to the invalidation point. And if market will break it, if it will appear that you will be wrong, you will not lose much. But if you will be right, market indeed will continue to move down, your risk reward will be significant. But again, that is only if you're sure with the bearishness of the market. If overall situation doesn't hesitate you, and you're absolutely sure that market is bearish. I do not have such confidence here. Well, and probably it makes sense to wait a bit and to understand how market will respond with this level, because if market will really start to show the deeper retracement, this move could be really significant and lead us to the area around 131, 131.50 area. That is possible. This will be not small move. That's why current analysis and current conclusion of the situation is a bit natural. But don't be upset much with this, because situation now changes very very quick, and the setup could change and clarify very soon, maybe in the beginning of the week, Monday and Tuesday. So that's my current thought on the euro currency. Keep an eye on this situation, it's really interesting, and I hope that we will be able to choose the right direction and take the reasonable and correct solution with the direction of the trade. Anyway, overall trend is bearish. The engulfing pattern tells us that a market has the tendency, has the direction to the 123.30 area. Our major task here in the short-term perspective on the current week is to understand where will be logical and correct moment just to enter the short side of the market.